Imagine losing your hard-earned retirement savings. A nightmare scenario for anyone. But what if you found out the company managing your funds made a critical error? That's exactly what happened to about 1,000 Netwealth members. And now, Netwealth is stepping up to make things right, agreeing to repay a whopping $100 million. Here's the breakdown. Netwealth has reached an agreement with the Australian Securities and Investments Commission, ASIC, to refund 100% of the money its members invested in First Guardian, minus any withdrawals they've already made. This impacts approximately 1,000 individuals who entrusted Netwealth with their retirement savings. But here's where it gets controversial. Why did this happen in the first place? Netwealth essentially admitted to ASIC that they didn't properly assess the financial risks associated with First Guardian before offering it as an investment option to their clients. Think of it like recommending a restaurant without checking its health inspection report first. A potentially dangerous oversight. This lack of due diligence is what led to members losing their retirement funds when First Guardian ran into trouble. And it doesn't stop there. The Australian Prudential Regulation Authority, APRA, another key regulatory body, has also stepped in. APRA has imposed several license conditions on Netwealth, including requiring them to engage an independent expert to thoroughly review all their high-risk investment options. This is a significant move designed to prevent similar situations from happening again. APRA Deputy Chair Margaret Cole emphasized the importance of robust investment governance and stated that APRA will maintain a strong focus on investment governance, particularly in the platform segment, throughout 2026. This means increased scrutiny and oversight for Netwealth and potentially other similar platforms. So, Netwealth is paying back the money and facing stricter oversight. But this is the part most people miss. ASIC, in a rather unusual move, decided not to pursue a financial penalty against Netwealth. Why? Because of the exceptional circumstances, specifically Netwealth's cooperation. According to ASIC, Netwealth was proactive and cooperative throughout the investigation, even without waiting for an outcome of the First Guardian liquidation or proceedings against other parties involved. This level of cooperation seems to have swayed ASIC's decision. Is this a fair outcome? Some might argue that a financial penalty would have sent a stronger message, while others might commend Netwealth for taking responsibility and prioritizing its members. To provide some context, ASIC had previously initiated federal court proceedings against Netwealth Superannuation Services Proprietary Ltd, NSES, and Netwealth Investments Limited, NIL, both of which are trustees of the Netwealth Superannuation Master Fund, NSMF. This shows the seriousness with which the regulator viewed the initial failings. The story doesn't end with Netwealth. ASIC is also actively investigating First Guardian and Shield Master Fund. Keystone Asset Management Ltd, the responsible entity of Shield Master Fund, is also now in liquidation, adding another layer of complexity to this situation. Furthermore, ASIC began investigating First Guardian's responsible entity Falcon Capital, First Guardian itself, and its director, David Anderson, in late 2024. The ripple effects of this collapse are far-reaching. It's a truly staggering figure. Around 12,000 Australians lost an estimated $1.1 billion in this twin superannuation collapse. This highlights the immense importance of proper due diligence and risk assessment in the financial industry. This situation raises some crucial questions. Should companies be held more accountable for the investment choices they offer to their clients, even if those clients are ultimately responsible for making their own decisions? Was ASIC right to forego a financial penalty against Netwealth, or would a harsher punishment have been more appropriate? And what steps can be taken to prevent similar superannuation collapses from happening in the future? Share your thoughts and opinions in the comments below.